David Dollar, Senior Fellow of Washington-based Brookings Institution and an expert on Chinese economy, described a bilateral investment treaty, or BIT, as a stable foundation for the economic integration of China and the United States, especially when trade is not growing very fast and kind of stagnating. The topic was discussed at the China-U.S. Strategic Economic Dialogue on Wednesday.
The bilateral investment treaty that we discussed, that would be very important to deepen the economic integration between the two countries. It could be a stepping stone to a free trade agreement that would really open up the two economies, and this would be very positive for both of us.
The BIT could also enhance the overall relationship between the two countries.
There are going to be some security issues where we do not agree, but the more economic exchange we have between us, I think the more likely we're going to work very hard to find agreement on other issues.
Dollar said China's investment in the United States is expanding and diversifying.
Well, I think initially, Chinese investment went out to look for natural resources, and the U.S. is not a natural resource country on a per capita basis. But more recently, China's outward investment has become more diversified, and there's actually been a big increase in Chinese investment into the U.S. So I think now, leaving aside Hong Kong, the U.S. is the biggest destination for Chinese investment. And we're going into things like food production, banking, real estate. Chinese investors bought one of the famous hotels in the United States, a movie chain, a chain of movie theaters.
Noting U.S. investment in China is disproportionately small, only accounting for 1% of the total amount. Dollar expects a BIT bring more American money to China.
In order to have this treaty, China will have to open up more sectors to foreign investment. That's the main concern that the U.S. has, that quite a few sectors in China are still closed to foreign investment, especially some of the modern services. So it'd be good for China to open up those sectors. They'll become more productive and competitive, and then we'll have better relations between China and the United States.
Investment treaty talks began in 2008, and the latest round of negotiations exchanged initial offers of negative lists.